As with more on the Canadian economy and the markets is Laura Lau. She's the Chief Investment Officer at Brompton Group. Nice to see you.
Great to be here, John.
All right. Should we start with our little,
Sure.
the other storyline here? What
Yes.
did you bring to the table here, Laura?
So
look at this.
Today is Eclipse Day.
Okay.
I can't see anything. It's pitch black.
That's the whole point. I have my own, by the way. Yeah, I know. I wish we could see the Canadian economy, the road ahead through these special glasses. It feels these days like we're not quite sure where we're headed. What do you make of the current situation and what's going to be a busy week for the Bank of Canada?
I don't think the Bank of Canada will move before the Fed. In general, they've actually cut rates before the Fed, but they've actually increased rates before the Fed, but they don't usually cut rates before the Fed. Although, let's be honest, the Canadian economy is a lot weaker than the U.S. economy, but almost every economy is weaker than the U.S. economy. The U.S. economy has been very, very strong.
Yeah, and there is this growing narrative now that maybe we don't even see any interest rate cuts for the year overall in the United States. Do you think that's a possibility?
So we started the year, there could be 6 cuts, 3 cuts, and now there could be 2 cuts. So
Right.
in June, actually the market's saying there's less than half probability that they'll actually cut rates in June. But I think by July they'll cut. And part of the reason is, I think, a little bit political. I know the Fed's not supposed to be political, but let's be honest, Powell has already been told by Trump he will not be, reinstated. So he would actually prefer Biden to be in power. So for Biden to be in power, you need the economy to be doing better. And if you cut rates, you can't cut it too late. You need the voter to see that the economy is doing better. So that's why probably June, July, you'll probably see some cuts.
Well, we certainly have heard politicians in this country asking for the Bank of Canada to consider cutting interest rates. It's not just at a federal level. We've heard some of the premiers making that case as well. And given our debt loads in this country at household level, we just cited some new survey details from MMP. Ultimately, does that force the Bank of Canada's hand on rates perhaps faster than in the United States?
As I said, in general, it should, but they haven't usually done it in the past. The other thing you have to think about is their mandate is really inflation more than employment. And if you do cut rates, what will happen is the Canadian dollar will weaken even more and your inflation will get worse. So that's the problem. They have this conundrum.
Yeah. And so as an investor, how do you think about this environment? Because we've got the TSX trading right now at an all-time high. It seems like the market has accepted the idea that we're not necessarily going to see a dramatic reversal in rate policy in the near term, but maybe the fact that economies have been resilient, that the profit picture has looked relatively good. I mean, what is pushing up stocks at a time of economic uncertainty?
I think the bottom line is the consumer, especially in the U.S., has been strong. It looks like a soft landing or no landing in the U.S., and that means that more cyclical stocks do better. And it feels like inflation will be higher for longer. So what does well in inflationary times would be oil. If the economy is doing better, oil does better. And we're starting to see other places like copper do better. So it's almost a reflationary trade coming back. So I would say that the things that are causing your inflation, you want more exposure to that. And that's usually things like energy, mining. And also if we have a soft landing, and it looks like we're not going to have a lot of loan losses, financials tend to do well.
And what about the fact that there's been so much market momentum? Does the simple fact that we're seeing record highs both in Canada and the United States, like if you're a money manager and you're skeptical or cautious of how far stocks have run in a short amount of time, but there is a lot of momentum out there, is that a consideration for professional investors right now?
I think professional investors do have to look at it, but I'm seeing more and more calls for, like most investment strategists, we've met their targets on the S&P 500. So people are getting a little wary. So what could happen is you have rotation within. So for instance, the tech stocks have done very well, and maybe you rotate a bit into some of the more value-oriented, more cyclical, maybe, as I said, energy, financial. So we do expect some of that rotation to continue. And we've also seen industrial stocks do well, partly because of the Inflation Reduction Act, all the nearshoring, and the AI theme is going strong. However, it used to be just really NVIDIA, and now it's spreading to Microsoft. It's spreading to data centers, electricity. So some of that theme is spreading out.